Markets around the world have exited correction territory, thanks in part to retreating bond yields. But could it be bonds that hold the key for market pullbacks in the future? Today we look at the key charts along with one other massive lead indicator. Also, Nvidia's earnings report is coming, but most analysts already looking towards 2025. Will it be able to give us the bullish run that most people want from it, or is it going to be a catalyst towards the bear side? And if we do get runs and we see continuation in markets, is it time now to start looking at small and medium caps? We've seen a lot of reports on the weekend showing us that medium caps are starting to heat up. But really, it's all about the key levels. And today we'll break down what's going on in the copper markets around the world, US oil and how it's on a new flying run, and of course, the big important factor, the US dollar finally approaches its first major test from sell-off. Often, if we've seen strong dollar, we've sometimes seen weak market. Could that be about to occur? Join us as we cover stocks, commodities, and cryptos together. Well, welcome back, everyone, to the Daily Show where we talk about markets around the world. And of course, it was a controversial day, including big moves across Microsoft and the OpenAI sector. Yes, that was really the discussion everybody wanted to talk about, but the reality was we just kept grinding higher. And this is part of that melt-up scenario that we've been talking about for a while. This is still a huge resistance zone, and we'll look at that later on today's show. But just a reminder, we do have a launch of our free weekly newsletter coming in only a few more days. So if you want to get involved, a few more spots open, VIP free weekly newsletter. Click on it, literally name and email address. It's that simple. Links in the description down below. Let's talk about why this market's going up. A huge part of it has to do with CTA positioning. We saw CTAs really going the wrong way. They were basically super negative, and then they had to go super positive in this current rally. That's forcing them to buy more tape this week in the vicinity of around $100 billion. And basically in the up tape, $38 billion of S&P 500 must be purchased in terms of S&P stocks. This is a pretty big deal, and obviously it's leading into this charge and rally at this stage. We shared this over on our X, following the links down below. We also know that when we get these huge rallies, 7 days positive, 8 days positive, and 9 days positive, we do tend to go into what we call a melt-up phase over the next 60 days. At this stage, that's exactly what's happening. And because the market is dulling, it's very difficult for us to short it without options or very tight stop losses. We have talked about some bearish scenarios, of course, this one being one of the big ones, which is 7 months of expiration, which happened last week, and the fact that we do tend to see sideways to down markets after it. Now, is it unusual to see a little bit of uptick from the expiration? Not necessarily. That's happened over here, it's happened over here, and of course, it has been a few times. But in general, we go sideways after the expiration for a little period of time, sideways to down. S&P 500 performance for Thanksgiving week. Now, we talked about how usually the Monday's down, and yes, statistics would have that happen. It was not that way this time. Monday actually showing you that it does have some of the positive factors with it, and it ended up coming through with the goods. But that may change, and of course, we know that this week's usually the week that brings kind of like the negativity with it, with rallies generally coming in strong the week after. So if we're going to see some weakness pullbacks, it's going to have to be realistically this week, at least in terms of the statistics. Here's Thanksgiving to Santa Claus rally trades, and of course, you can see again, very positive signs from the market. 79.45% of the time they've been winners, and the average loss hasn't been very big since 1950. So again, it seems likely that we may rally into the end of the year, and we might have to look at rotation as one of the biggest factors. Now, have we had 2 weeks of everybody being bullish? Yes, but just remember, even though everyone's been bullish, puts have been purchased pretty strongly over the last couple of weeks. And that's been a huge factor, I think, towards why markets can't go down. Also, those CTAs buying everything they can get their hands on doesn't help us as bears. Let's move over a little bit to Treasuries. Now, Treasuries are holding a lot of the key. We talked about bonds before, and we'll look at bonds from the perspective of the price action in just a few minutes. But really, Treasury outflows. Now, this might look negative on the surface, but I posted on X about this and how, generally speaking, when we've seen outflows for the first time after a huge rally in the amount of people trying to get involved in them, that can be a bullish catalyst. Take a look here. This is the first time we saw massive outflows, and it actually started a huge move for Treasuries. It's completely counter to what you might think. Over here, we've finally got a change of trend towards the Treasuries on the outflow side. and it could mean that we're actually at the base of this particular trade. We also know that 30-year bond performance tends to be negative in terms of yield. So bond performance is positive, yields are down from November 6th to 26th, which we are still in that window. And so far, that stat is coming completely true. Small caps, if they're going to do well, tend to do well around mid-December with a lot of kind of sideways at this point. We'll look at the Russell a little bit later on, but mid caps could also be the interesting point, and we'll do a special coverage of mid caps in our next video. So make sure to subscribe and smash that like button, hit the alerts if you're interested, because these medium caps are where the next rotation of money is going to occur should we continue to see new highs, especially if we break to a new high in the S&P 500. I wouldn't be surprised at all for mid caps to overtake large caps in terms of percentage. Let's talk about first rate hikes. Are we through the window yet? Absolutely not. If you're a bear in these markets, of course, you are looking for things such as unemployment to start spiking up. That usually means you're about 6 months away from recession call after being inverted for so long. The other thing you're looking for is, of course, we're looking for US 2-year versus 10-year to actually uninvert. Now, if that happens, you're generally about 4 months away from a recession call. Now, why is this important? Well, it's possible we go into a soft landing scenario, but it's more probable that, of course, something else happens. And of course, everybody's now talking the soft landing narrative. So unfortunately, most of the time we're half wrong. Let's find out. We don't know, but in 2024, this is certainly going to bring some interesting points. And as we know, we're looking at US 10-year to generally show us that the Fed is pivoting. And so far, the US 10-year has done what we call a first time frame change of trend. So basically speaking, it looks like it's telling us that something is coming. Now, on average, if you're a bear and you see these types of things happen, well, it's not good for the market. 195 days it usually takes to go to the low, and negative 23.5% is what we see on the average return of the S&P 500 from top to bottom. Now, of course, bears will be looking at that saying, I hope that can happen so I get cheaper prices. It's possible. It's obviously also in the cards, but remember there are outliers to this. 1980 and of course 87 and 89 we saw long protracted short levels, but at the same time we didn't see anywhere near that negative 23.5%. So again, the stats are on your side in terms of being a bear if we do see uninversion, but we'll have to find out soon and wait for that report. And of course, then there is gold. Now, gold's been struggling in the last 24 hours and it might start to turn around. Again, yields and what we've been talking about recently still in play. We've been discussing the idea that everyone was negative on gold. Then it started to squeeze out those positions. We're sitting just underneath 2000, sitting about 1970 or so. And I still think gold is going to go to an all-time high over the next 6 months. So we'll find out whether it can, and we'll check out the charts a little bit later on. As we mentioned, NVIDIA is the big one today in terms of Tuesday coming. We've got NVIDIA after the close with their report. And we've got also John Deere coming out, which will be an interesting one. A lot of people looking at the MOO sector right now for rotation. It's not bad on the charts, so it's certainly something that's worthwhile considering and looking at from the price action standpoint. Let's move over to the big positions that are being traded. And I can tell you there are trades everywhere going on at the moment in terms of large positions. We've got the TQQQ, that's a massive leveraged fund position going through just the other day. Then we've got movements in the Qs up here near the highs. And of course, we see this across the board, the SPY as well, big trades at these highs. We've got big trades on UPRO and we have big trades on Treasuries. Now, what is this telling us? Well, it could be that the CTAs and just general positioning has to come in to the markets and they're actually just accumulating positions while they don't want to be caught without, this massive rally, because the worst thing in funds management is to be left behind in positions, especially when the market's going up. Even if you underperform, you can get away with that, but you can't be left behind. But a lot of trades coming in. Often they can be delayed for the end up short. So of course, we'll need to look at key levels for the S&P 500 soon. Some notables that were really good for the trade recently, energy stocks in particular, noticing that energy was getting a large trade on it. This happened only about 2-3 trade days ago. And of course, since then, we've seen huge rallies on oil across the board. And another one that of interest is, of course, what we saw on the biotech industry, which we'll look later at when we get into the charts very, very soon. Let's talk unusual options activity and what happened on the session. First up, it wasn't a big session. It was only almost 35 million in terms of size, 57% call. So another day of strong call buying in comparison to puts, which still should start to make us tip in the favor of more calls coming into the system and less puts in the system, which really opens up the ability for bears to get back involved in the markets. But we just don't have those signs quite yet, and we'll talk about the key levels soon. Some other things in terms of what's going on with ratios and everything like that. You can see here that there wasn't any huge trades coming through. SE, probably notable, 1.54 times normal average volume. And we also saw things like Chevron as well, starting to get some big activity on them from the options side. Mostly small and mid caps as well, getting a bit of options trade. From rotation standpoint, solar was the best, tech was the second best, and then semiconductors. And we didn't really see a super strong kind of movement from things like MOO, utilities, regional banks, those types of things that we hope to see more rotation for in the future. Well, not so much utilities, but it'd be nice to see MOO doing a little bit better and a few of these others coming through. Now, last 5 days, one of our favorites has been up there recently, which is, of course, home builders and materials. And we've really enjoyed the materials move. And I think there could be more in that based on what we're seeing currently on the copper side. So let's now take a look at all of the lead indicators that are showing us what's going on in the markets. And then, of course, we'll watch the commodities, the currencies, the indices, and more importantly, the stocks as well. So first up, we've got bonds. What are bonds markets telling us about the market right now? Well, they're actually breaking to new highs. This is one of my custom indicators that I like quite a lot. And it really shows us that we've got a fairly strong market from at least what the corporate side is telling us when we consider rates and everything else that's going into these markets. A new high is certainly something that we need to be paying attention to. And more importantly, it's made a series of higher highs and higher lows over recent months. Now, you'll notice that this actually started to spike up before we bottomed off in the market. So it was an early indicator, and that's pretty traditional with bonds. Often bonds will tell us earlier. Another one was junk, to have a look at junk bonds. So this is the HYG, if you want to take a look at this one here. And what that's showing you again is some strength. A big alert to be setting in the future is going to be 76, because if we do manage to get through 76 on junk, it's telling you that the market is really starting to rip. And this is going to usually bring up mid caps and small caps as one of the better investments moving forward. They tend to work a little bit hand in hand. You'll notice that junk bonds actually look a little bit like the Russell when you look at them both on the chart. Advanced decline, this ratio actually was going down a little bit during the session, even though we were making new higher highs, telling us that it wasn't necessarily a super breadth market. And of course, Treasuries did well thanks to the US 10-year and 2-year yields and everything else dropping off a little bit. Treasuries still moving forward, hopefully going to hit something like a 93 in the future. One of the other things that we can look at when we're talking about markets and whether we're going to see a sell-off is always going to be put-call ratio. And it's not really clear right now whether we've got a huge amount of calls back into the market yet. What I have heard, though, is that the Mag 7, and I'll see if I can get a chart for this, are some of the least hedged at the moment. So that does open up the capability of the market having like a flash sell-off at some point, though it's unlikely to see too much of that flash selling till maybe 2024 based on at least seasonality. Another thing that we see here is the BOFA, or the Bank of America. Basically here we have the high effective yield rate, and we notice that that's started to drop off here, and that's something that's pretty important. If that's dropping off and the market's going higher, again, it gets a tick of approval. If this yellow squiggly or orange squiggly line is going the wrong way, that's going to be something we need to be concerned about. Again, we'll bring it up on this channel, so make sure to subscribe if that's something we see. Dow Jones Transportation Average, we continue to see this one here moving towards like potentially a new breakout high, and obviously no significant sell-off just yet. Home builders, another one we're watching. We're waiting for an alert to be telling us that there's a new high here on home builders, really confirming the market is melting up and is going to continue to rally. But at this point, we just haven't seen that. So we've got to be very careful around here with home builders. There is still potential for a sell-off. We have alerts straddling both sides. So maybe something you could do if you want to get a bit of an early indicator. One of the ones that we've been following recently has been central banks and what central banks have been doing. We've got a green squiggly line here and a purple squiggly line, and both are showing incredible injections. Just remember, and we'll put this out in our newsletter, which you should subscribe to, links in the description down below, totally free to subscribe to. We'll be talking about how Central banks will never cut out of the goodness of their heart. Remember, this whole speculation of a Fed pivot and yields going down and everything, that's not necessarily good. Why are they injecting in the back end? I would say something's broken and we just don't quite know exactly what it is yet. Maybe you do. Again, I'm reading the comments to see if anybody knows what is broken. Some of you have been saying everything, Tom. Yeah, probably, but that's not a good enough answer. We need better than that. One of the things that has been improving recently has been copper. I believe we've been all over the top of this one. Beautiful switch of trend on copper recently. Really nice pullback to this trend line, and of course, some strength coming out of it. Similar to that, we've seen iron ore also finding some strength, which has been nice. Now, the US dollar coming down to critical demand. So the US dollar has been weak. We've been talking about it, and this could be actually one of the indicators for the bears in markets. We know that if the dollar starts rising up sharply again, coming back to maybe this supply over here, that might be in line with a pullback in the stock markets around the world. So we do need to be watching the US dollar. We're coming into absolutely territory where I could see some shorts being closed off, and we'll need to be all over the top of this level. So we're looking for structure now. Remember, patience, react, don't predict. So far, so good for a lot of the currency trades. One of the ones we bought up a few weeks ago was my belief, and obviously a lot of our beliefs, that the Australian dollar would outperform the US dollar. So far, an amazing trade, up multiple cents, and it just shows you again, this was a super point of change in the markets. Many different markets, many different opportunities. One of the things I always try to talk to everybody about here is the idea of abundance mindset. It might mean nothing to you initially, but if you do have an abundant mindset, you will always see another opportunity. See, right now you might be focused on Tesla and raging the chart, or maybe you're raging Microsoft because it's running off into the sun. You're saying, oh, how could I miss that? There are always other opportunities coming, just like there will be in oil, just like there will be in gold and every other instrument. It's a great thing to be able to follow so many charts, because you will see that money flows through the system and it kind of just rotates around. Sometimes it's hot to be in oil, sometimes it's hot to be in gold, sometimes it's hot to be in indices. Right now, of course, indices getting a lot of love and US dollar getting a lot of hate. And that's been actually the best short in the markets recently and probably will continue to be so. However, we're in that point. Another short was oil. So we were moving down to our most traded level number 2. And you can see here that we have a series of lower highs and lower lows kind of going on. We hit the trend line, we broke back down. This is most trade level number 1. Until we clear past 80, I'm not sure that oil is really in a proper upward trend change yet, where we can start to look for structural buys. But this is in line with that OPEC stuff, and obviously there's a lot of discussion going on about oil at this stage. It was oversold, and we saw dark pool activity really kind of agreeing with that concept as well. So that was one that, I guess it was kind of a good take profit zone. Tesla, not too much movement on this particular stock. Still stuck in a range. We're still looking at hopefully a 222 in the future. Can we get there? Maybe we find buyers around this level. A lot of moving averages and VWAPs and things that are touching it. And yeah, it's stuck in the middle of 2 ranges. So very, very tough on Tesla. Nvidia, ahead of earnings, what have we got? The market's trying to break out. In fact, it did make a new all-time high here. And one thing I guess I'm playing with Nvidia is that maybe buy the rumor, sell the fact. Maybe the earnings result is strong enough. But if we go back through and we have a look at previous times, you can see here, this is all the years that NVIDIA has done its thing. There are quite a few times where it breaks out of ranges and then it actually comes back in. So the most notable one happened after 2020, where we sat in quite a few ranges. Now, you'll notice here we get an earnings result and it pushes it back down. Even though it was a green, looks good on the surface earnings result. And a lot of the time, I find NVIDIA will do false breaks. So we get a lot of false breaks, not necessarily like rallies off these initial channels. So I am kind of cautious here at the breakout of NVIDIA. I know everyone's very excited for it and looking towards the future being very bright for the stock. And look, it's absolutely smashing it. However, I think the caution could be there for traders. However, investors are probably going to still like it regardless. I mean, it still is a breakout. And every time those false breaks had happened, they pulled back, sure, but then they still ran on to new highs. You don't usually want to go against semiconductors if you can help it. Another sector that we've been talking about is materials. Obviously, I've been more focused on iron ore recently and gold and copper. But you can see here XMEs playing with these resistance highs. A good alert in the future is something like 54 to be taking a look at. So we'll, of course, watch this and be on top of it. And another one was, of course, the biotech industry as well. If you have a look at the IBB and ratios, they're trying to break out at this stage. these downward trends. So again, there are lots of other opportunities in the market. It doesn't have to just be the Mag 7 this time around. I'm guessing mid caps are next to go if we do end up getting a new high on the S&P, and we'll talk about that in a moment. Oz 200, heaps of tweezers, heaps of little rejection wicks towards the upside. Doesn't look likely we're going to get to a 7,000 just yet, but of course, I believe the US 500 will really, play the game here in terms of what goes on. The Aussie market did break out trend line though, so you have to be in general bullish, and you're looking for a closure into that wick or even above it. And if that does happen, could be a really nice move to 7,300 for the Aussie traders out there or anyone that likes to trade the ASX 200. German market right into resistance. I put the DAX back in here because it has been absolutely just blitzing people. What I'll do is I'll upload onto X. I'll put it on the platform later, so follow along. What the sentiment currently is towards bull and bear futures positions of retail traders. We might be surprised what we're starting to see. Possibly there's a shift that's going to tell us if we are even able to go down, but absolutely just destroying into that zone. I want to get the percentage out here and just show you here. 9.26%, probably less than even a 1% pullback through this. It's a big rally. These are not normally the best things, but yeah, stopping the freight train can be quite hard. So that's something that we do need to be paying attention to when it comes to these markets. CQQQ in focus again. This is the Asian technology sector. It looks like it's bottoming off. It's broken that downward trend line a little while ago. It's broken to a new high. This is the type of thing we were looking for. I'd like to see them actually start to turn. I've noticed a lot of people are doing Barber write-ups at the moment. I'm not a fan of Barber, but hey, it does look cheap on paper, doesn't it? There are still concerns. The Russell 2000 couldn't sell that zone. So this is actually where, if you were looking at shorts, this was probably the best short on the indices last 24 hours. Now, it's barely up against you. It's not that bad, but it's not above these highs yet. But yeah, very tough. There's just no signs of really seeing the weakness just yet. And a lot of that has to do with just too many retail traders really slamming this area. Qs, of course, new high. They could easily go to 400 now. Unfortunately, this is a dull market, what's becoming a dull market. So you can see that, it's really pushing towards those new high levels. And if we scroll over here to the S&P 500, you'll notice that, again, it's almost filled that gap, 4575 from the gap of the sell down. And what I've done here is I've just labeled how many gaps there are on the upside. So you've got 1, 2, 3, 4, 5 gaps. That's pretty big. It's very rare to see at least none of these fill. And a lot of people have been saying, why are gaps not filling? A lot of it has to do with, I think, gap trade became a really good trade there for a little period. And now it's kind of getting, I guess, smashed. This sometimes happens. You see rotation through certain trading styles. That's why I always say the best way to do it is to build confluence through having between 4 and 7 different reasons to place a trade. Do I like this zone for a short? Well, of course, it's obvious, but that doesn't mean that it's going to be the best. And we still maintain the same price, 44.85. We didn't get below it. Because we didn't get below it, patience, react, don't predict. Unfortunately, this is a dull market at this point, and it kind of brings us to the same point as Bitcoin. We cannot be sure it's going to sell yet. You have to kind of expect the unexpected, but you just can't be sure of it. Here's the US 500 to show you how this thing's going. Of course, is this a key zone? Yes. Did we stop? Yes. At this stage, considering the price action so far, pullbacks to be met by bull demand because, of course, this was where we saw trade. So if a sell-off does come in somewhere in this area between kind of 4,500 and 4,520, you're going to have to expect some buyer to try to be there. If it does get underneath 44.85, then we've got a different story. Then we can talk about rallies being met by sell demand back into 4,400s, back into the 4,300s, etc. But everyone wants that pullback. I understand why. It's a massive rip market. But just look at Bitcoin, the discussion we've been having about Bitcoin. Bitcoin here is a classic example of not being able to short the market off. We've been talking about this for, I think it's been 4 weeks now, and we've been unable to see any short opportunities. And a lot of that has to do with the fact that we just haven't seen those lows. So it's kind of like that on the stock market right now. We just haven't seen it. Did we think about that level? Absolutely, we did. Absolutely, we wanted to trigger off a short if we could. We talked about options being one capability of maybe pulling the trigger on it. They could still come in if you've got time on your side. But yeah, this is the type of same market. And Bitcoin's the same thing, 38,000. unfortunately, we might be going towards, for people wanting to get in, it could be 39.5 or 46K before Bitcoin actually slows down. That's something we've discussed several times. Ethereum is still holding in between. I don't think Ethereum will break until Bitcoin gets that new high. Usually Bitcoin leads, Ethereum comes secondary. So that's something to be watching. I think all eyes should be on US dollar at this stage. That is possibly one of the biggest keys. Of course, look through your upcoming news events that are coming out here. Nvidia is going to be a catalyst after the close. We've got Tuesday's FOMC meeting minutes at 2 p.m. That's going to be a big one. Bunch of central bank stuff. Obviously, Thanksgiving coming up this week, which we've talked about, a lot of the stats that go around that, which do tend to be near the end of the week, often bullish. We will talk about quite a lot of stuff in the next video, though, so make sure to stay tuned. And a quick reminder, if you enjoyed today's video, you enjoy what we put out, then why not sign up for our free weekly newsletter, first edition, coming very soon. Completely free to enter into. There are still some limited spots available. Thanks so much to the thousands of you that have gone in already. I appreciate all of you guys, and we will be writing that pretty consistently now moving forward. So you guys will basically get a weekly session of some updates, some things that you don't see on this show, and of course, I hope it's a better understanding of the markets as a whole. We'll always have a nice focus there. Thanks so much, guys. Subscribe, smash the alert button if you enjoyed today's video, and the thumbs up and all those things, and we'll see you in the next one. Bye for now.